Yo, what's up, YouTube? Fritz Knows Investing back with another video, and today we'll be talking about PayPal and whether or not it's a stock buy. So in today's video, we'll be talking about a brief history of the company, what PayPal is, some advanced metrics, and how they've been performing recently. We'll also talk about all the ways in which PayPal makes their money, and finally, I'll leave with the verdict. If you haven't done so yet, please don't forget to like, comment, and consider subscribing to the channel. It helps out the YouTube algorithm, but it also shows that you like and support what I'm doing. So with no further ado, let's get right into the video. So if you've never heard of PayPal before, this is a technology platform and digital payments company that enables digital and mobile payments on behalf of consumers and merchants worldwide. The company's payment platforms allows consumers to send and receive payments, withdraw their funds to their bank accounts, and hold balances in their PayPal accounts in various currencies. Personally, I like this company for their strong balance sheet, but also this company has done really well during the pandemic, as we'll see later on in the video. Now that we've established that PayPal is a financial technology company, we'll go over a history of the company PayPal. This company wasn't even called PayPal when it was originally founded in 1998. It was actually called Confinity. Pictured here are the founders, Peter Thiel, who's in the middle of the page, and Max Levchin, who was on the left-hand side of the page. The original premise of this company was to act like a middleman and provide low-cost digital payments for consumers and businesses. So one of the early primary objectives for this company was to trade email, banking, and credit information for fast, low-cost digital payments. Now back then, there were checks and there were also other digital payment platforms that had a 2 to 3 day turnaround for payments. So there was a massive need for digital payments with a quick turnaround. Now pictured here is Elon Musk, who definitely looks a lot better today than he did back then. So I got to give him some credit. So in 2001, Elon Musk actually had his own payments processing platform called X.com, and instead of competing with Confinity, they decided to merge and create the company that we now know as PayPal. So in 2002, PayPal emerged onto the stock market originally for $20 per share and was sold to eBay for $1.5 billion. So eBay decided instead of competing with PayPal that they would just buy them out so they would have their own payments processing firm. This made the original founders, including Elon Musk, very rich. In 2008, PayPal celebrated its 10th anniversary and at that time had 150 million active accounts. Now, an active account officially counts as one payment sent or one payment received over the course of 1 month. In 2013, PayPal purchased Braintree for $800 million. Braintree specialized in mobile and web payment solutions, and a division of Braintree was Venmo, which specialized in mobile payment services. Because of possible competition from Apple Pay, eBay and PayPal decided to split back in 2014. Now at that time, PayPal accounted for 40% of eBay's total revenue, and after the split, eBay shares went up 6%. Back in 2015, PayPal decided to buy a company named Zoom for $890 million. Now this company allowed consumers to pay bills, send money, and also reload mobile phones from the United States to Canada to over 131 different countries. Now, I was surprised at how long it took, but back in 2017, PayPal introduced a feature which allowed peer-to-peer sending of payments. So just to clear up any kind of confusion, Venmo is a subsidiary of PayPal, but the two companies share some small differences. Venmo is restricted to personal use and is often free, but exists as part of a digital wallet, but also partly as a social media feed. And there are certain daily and monthly transaction size limits. PayPal, however, is encouraged to be used by businesses, but may also be used for personal use, and they charge a small fee for transactions and transfers, but typically don't have as strict limits on transaction size as Venmo does. Alright, so now it's time to talk turkey and talk about how PayPal has been performing recently. You can see the stock's price was $191.46. It was down to $1.61 for August 14th, but after hours it went up 38 cents. If you look towards your right, you can see the chart and how the stock has been doing recently. We can see that for the day, the company's stock price floated between $193 and $190 before settling right around the $191 range. For the past 5 days, it went between $198 and $186. For the past month, the stock price has appreciated pretty nicely, up almost $20. For the past 6 months, we can see that the company's stock price went from $122 because of C19. If we look, it dipped down actually a little bit further down into the mid $90 range, right around $95. So if you would have invested then, you could have more than doubled your money. For the past year to date, we can see that the stock price rose almost $80, up from that $108 range. For exactly 1 year, it rose up $88. And for the past 5 years, the company's stock price is up from $38. If you would have invested then you could have almost over 5x your money, which is absolutely ridiculous. As far as my participation in the stock, I own 1.29 shares of the stock for an average price of $152.74. That equates to a market value of $248. For the day, I was down $2.07, but overall I'm up $50.18 or 25.35%. Now, this company does have a nice size market cap worth around $224 billion. The beta of this company is 1.21, which means that it's a little bit more volatile than other companies on the market. The PE ratio, which is the company's stock price divided by its earnings per share, is 87.87. Now, the reason why this is so high is because there's an expectation of great growth for this company in the future. The earnings per share of this company was $2.18 per share, which means that the company has been pretty profitable. And this company currently does not pay a dividend, even though I wish it did. For me personally, as an investor, I love to invest in companies that are consistently growing their revenue and earnings. That means that the companies are well managed, but it also means that there's great demand for those companies. So we can see that in 2016, the revenue was $10.84 billion over $1.4 billion in earnings, which climbed to $17.7 billion over $2.46 billion in earnings in 2019, which is a great sign. So I gathered this information from PayPal's investor relations section, which talked about their second quarter 2020 results, which was July 29th of 2020. And we can see that the total payment volume was $222 billion, which was up 29%. The revenue was $5.26 billion, which was up 22%. GAAP earnings per share, or generally accepted accounting principles, was $1.29, which was up 86%. And cash flow was up to $2.46 billion, growing 103%. And free cash flow was $2.2 billion, growing over 112%. Some other highlights were net revenues were up 22%, operating income was up 35%, and like I said before, earnings per share were up 86%, which is just amazing, and it shows that the company's doing really well even in times of the pandemic. So since becoming its own independent company back in 2015, we can see that the net new active accounts was up 522% from 3.4 million up to 21.3 billion. Total payment volume rose 221% from 69 billion up to 222 billion, and net revenues rose 129% from 2.3 billion back in 2015 all the way up to 5.26 billion as of the second quarter. One important metric that I like to look at is free cash flow. This is the amount of cash left over after a company pays off its expenses. And for PayPal, you can see that in December 2015, the free cash flow was $1.8 billion, and this went up to $3.8 billion as of last December. Now, I like to look at this metric because even though we've been going through a pandemic, the company still had a lot of cash left over to be able to pay its employees, but also be able to invest in other kind of ventures to make the company more money in the future. One last metric that I like to look at is the company's assets versus liabilities. You want your assets to be greater than your liabilities because that means that the company has a lower amount of debt and is more likely to be profitable. So we can see that for PayPal, the total assets as of 2019 was $51 billion and the total liabilities was $34 billion. So the assets outweigh the liabilities by almost $17 billion. And I think that's a great job on PayPal's part for being profitable. So PayPal has at least 8 different ways in which they make their money, and some of the ways in which they make their money is through transaction fees. So when you're selling with PayPal, there's a 2.9% plus 30 cent per transaction fee. Payflow payment gateway fee is basically a custom checkout page for businesses, and this costs around $30 per month. Business in a Box is an e-commerce solution, and PayPal earns a commission when you set this up. PayPal working capital loan fee is basically a business loan, so PayPal earns a one-time fee when you set this up. International money transfer fees, it depends on which country you're sending the money to, but these fees can range from 0.3% up to 3.9%. Withdrawal fees, so it's free to send money from PayPal to your bank account, but if you would like a check, this costs a small fee. PayPal credit interest, if you want to finance an item over $99, as long as you pay it within 6 months, there's no interest involved, but after that 6 months, there's a 26.24% interest on the remaining balance. And finally, a PayPal Here fee, which is basically kind of like a credit card reader, and the fees for this can range from 1.5 up to 3.5%, plus a fixed cost per transaction. For the final verdict, in my honest opinion, I think that PayPal is a solid stock buy for several different reasons. First of all, the explosive growth. The company rose from $38 in 2015 all the way up to around the $200 mark where it is today. There's been over 100% increases in new accounts, payments processed, and also revenue. The company has a solid balance sheet with over $3.8 billion as of 2019. The company has had rising revenues for at least the past 4 years, all the way up to $17.7 billion, over $2.46 billion in earnings. And also the company is a mixed bag and has something for everyone. For instance, for millennials, there's Venmo, and then for businesses, there's PayPal. But for our foreign customers, there's Zoom to help us process those payments over there. So I was unable to find any current data for 2019 and 2020, but back in 2018, there was a survey conducted by NPS for CNBC, and these were the most popular payment methods in the US. There was over 1,000 respondents for this survey, and 44% of those people said that they use PayPal. With the rise of e-commerce and contactless payments, I believe that PayPal will be a major player and will continue to increase their revenues and active accounts to be even more profitable in the future. So now it's your turn. What do you think about PayPal? Do you think it's a company worthy of investing in, or would you consider investing in another kind of company? Please don't forget to comment down below. And also, if you like these style of videos, please don't forget to like, comment, and consider subscribing to the channel. Even though we have a pandemic going on, I believe it's a great opportunity to make some passive income. So please do your own due diligence and look at all the right metrics before selecting your stocks, and you will have an opportunity to make some passive income also. I want everybody to stay safe, so please don't forget to wear your masks. Also practice that social distancing. And finally, please don't forget to always wash your hands so you decrease your chances of getting the illness. Last but certainly not least, please don't forget to keep getting that passive income for your future. This has been Fritz Jones Investing with another update, and I'll catch you next time.